Assalamualaikum warahmatullahi wabarakatuh. Hello, ladies and gentlemen. My name is Muhammad Mukhsin. In this lovely occasion, I would like to present my thesis with the title The Influence of the Tax Planning and Deferred Tax Expense toward the Earning Management as an empirical study to the state-owned enterprises that listed in Indonesian Stock Exchange period 2017 until 2019. First of all, I want to say thank you to my thesis advisor, Dr. Fauzan Misra, SA M.Si, AKCA, BKP, that already gave me advices so that I can finish my thesis. I would like to say thank you to the lecturer that will be as my thesis reviewer that will give the advices to better of my thesis. This presentation consists of 5 chapters. The chapter 1 is the introduction, the chapter 2 is the literature review, and chapter 3 is the research methodology, and chapter 4 result and discussion, and the last is chapter 5, the conclusion and suggestion. Okay, we begin with the chapter 1, the introduction. In this chapter consists of the research background, research problem, research objective, research contribution, and writing systematic. The first is the research background. There are several backgrounds that this study is important, namely, accrual accounting allow the manager discretionary. As we know, the accrual accounting is considered the more rational and fair, reflecting the company's financial condition in the real terms, because the accrual accounting can provide a better indication of the company's economic performance than the information generated from the current aspect of the cash receipt and payment. However, the use of the accrual basis can provide flexibility to the management, and this called as the manager discretionary. The discretion principle can be utilized by management to intervene the financial report for the sake of facilitating the interests of several parties. The intervention activity causes of loss of reliability the financial statement. This is what they usually refer to as the earnings management. Healy and Wahlen argued that earning management will mislead the stakeholders so that influence in their decision making. As we know, the earning is important in the decision making. Earnings management is taken by the management to meet the expected earning of shareholder that related the compensation plan, because the main responsibility is to optimize the owner's principal. By doing their duties properly, manager hoping to get the higher compensation. According to Morphy in 1999, the reported earning is the main criterion to assess the CEO performance, because the others such as stock return, stock price are affected by the macroeconomic event and the other external factor which manager cannot control this. Healy in 1985 also investigate the main manager motivation to do earning management is related to the bonus plan. Healy's study is the support the agency theory, while there are an overlapping interest between shareholder as the principal and the manager as an agent. There are two different interests in the company. Each parties try to achieve or maintain the desired level of their prosperity. As the main source of the state revenue, the government continues to try to increase their tax revenue. In 2019, in the national budget, government has the budgeted 1,780 trillion rupiah, or about the 83.5% of the total state revenue. As the largest component for the state revenue, the Directorate General of Taxes continues to make effort to increase the tax revenue realization. However, in this condition is very contrary to the expectation of the taxpayer, who want to pay the tax minimum as possible. So that for a taxpayer, tax is a burden that must be paid to the state that can be reduced the net profit. Therefore, in the order to reduce the tax burden that must be paid, many companies try to manage their tax. Tax manager tries to find a loophole which can be utilized to minimize the firm's tax. Thus, the manager effort to minimize the tax payment is called as the tax planning. Pohan 2013 defined the tax planning is an effort made by the tax management of the company, with the aim of finding the gap so that can be paid the tax minimum. In Indonesia, there are two financial statements that should be reported, namely financial statement based on the PSAK or Indonesian accounting standard, and the financial statement based on the tax regulation for the tax purpose. The difference of the provision affected the firm's earning. Then the difference also has effect to the tax payable. The temporary difference between the commercial earning and the earning from the tax regulation rise to or called as the deferred tax expense. And one of my background to do this research is the cases of the PT Garuda Indonesia. In its 2018 annual report, PT Garuda Indonesia reported the net profit as much the 809,000 US dollar. This figure jumped sharply compared to the 2017, which suffered a loss $216.5 million. After the investigation, it find that the Garuda Indonesia include the earning from the PT Mahata Aero Technology, which has debt to the Garuda Indonesia, but it have not been paid. Earnings management is the important topic to research because the earning is the main concern of the all stakeholders in assessing the performance of the company when in the decision making. Based on that, the study interests to do research with the title "The Influence of the Tax Planning and Deferred Tax Expense Toward the Earning Management," an empirical study to the state-owned enterprises that listed in Indonesia Stock Exchange for the period 2017 until 2019. The next, we move to the research problem. There are three research problems in this study. The first is that tax planning has the significant influence toward the earning management by the state-owned enterprises that are listed in Indonesian Stock Exchange. The second is the deferred tax expense has the significant influence toward the earning management by the state-owned enterprises that are listed in Indonesian Stock Exchange. The tax planning and deferred tax expense simultaneously has influence toward the earning management by the state-owned enterprises that are listed in Indonesian Stock Exchange. The next is the research objective. Based on the research problem, there are also three research objectives. The first is to find the empirical evidence in the tax planning has the significant influence to the earning management by the state-owned enterprises that are listed in Indonesian Stock Exchange. The second is to find empirical evidence that our deferred tax expense has the significant influence toward the earnings management by the state-owned enterprises that are listed in Indonesian Stock Exchange. And the third is to find the empirical evidence that the tax planning and deferred tax expense have simultaneously have the influence toward the earning management by the state-owned enterprises that listed in Indonesian Stock Exchange. Then we move to the research contribution. This research result is expected to contribute to the empirical and practical aspect. For the empirical aspect, the study is expected to enrich the previous study by using the research data. Is the reason the previous study because this study used the modified Jones as the model to measurement of the earnings management. In practical terms, This study is expected to use as a reference that can be used as information relating to accounting, especially in the earnings management, by using the tax planning and deferred tax as expense and deferred tax expense as an indicator. It is expected to provide information to reader that aim to give the new evidence for the earnings management practice so that the negative effect can be reduced. And the last of the chapter 1 is the writing systematic. The systematic writing of this research consists of the 5 chapters. The chapter 1 is the introduction, that consists of the background, problem statement, research objective, research contribution, and writing systematic. And the second chapter is the literature review, that consists of the theoretical foundation used related to this research and conceptual framework, hypothesis of this research. And the third is the research methodology, contains of the design, population and sample, type of source of data, research variable, and data analysis. The next is the result and discussions chapter, and this chapter contains the description of the result of the data analysis of this research and discussion of the result. The last is the conclusion and suggestion, that contain a conclusion, implication of the research, limitation and suggestion from this study. Okay, the next we move to the chapter 2, literature review, and this chapter 2 consists of the theoretical framework, purpose study, conceptual framework, and hypothesis development. The first is the agency theory. According to Jensen and McLean in 1976, defined agency theory as the contract under which the one or more person engage another person to perform the some service on their behalf, which involve the delegating some decision-making authority to the agents. In the agency theory, each individual is motivated to fulfill their welfare and interests as person. The next is the positive accounting theory. Positive accounting theory explains that the accounting choice is a part of the firm's need for minimization of the political cost. The positive accounting theory is initiated by Ball and Browns in 1988. Ball and Browns investigate the relation between the information and stock price and found that efficient market hypothesis. Then, in 1978, Ward and Zimmerman stated that the certain economic factor can be related to the behavior of the managers or the financial report makers. And in Aditama and Purwaningsi 2014, state that positive accounting theory is the part of the agency theory because the positive accounting recognizes the three agents relationship, namely between management and owners, or call it a bonus plan hypothesis, between management and creditor, or known as the debt to equity hypothesis, and the last is between management and the government, or the political hypothesis. Okay, the next is the earning management. According to Scott 2015, earning management is the choice by a manager of the accounting policies, real action affecting the earnings so as to achieve some specific reported earning objective. The definition of the earning management is also put forward by Belkawi 2004, who sees the earning management as deliberate intervention in the external reporting process with the intention of obtaining some personal benefit. There are several motivations of the earning management. Earning management is carried out to achieve certain goals. There are also 6 objectives of the management want to achieve in the conducting earning management. Namely, the first is the bonus purpose. The bonus is the main reason of the manager to manage earning. As they explain the agency theory, the manager try to achieve higher bonus. The second is the political motivation. Management perform the earning management with the aim of the influencing the decision of the user of the financial statement. The next is the taxation motivation. Taxation motivation is that the companies carry out the earning management with the aim of making tax saving. The management minimize the profitability so that the tax that must be paid to the government is also smaller than it actually is. The next is the CEO change. Management usually perform the earning management by the CEO who is nearing his retirement, usually done by increasing the profit with the aim of getting a bonus, so their performance is look like nice. Next is the initial public offering. The companies that make their first stock offering on the stock exchange and do not yet have market value have tendency to conduct earnings management so that the investor interest to invest their money in that company. The next is the importance of providing information to investor. All investor relating to the company that must be conveyed by manager to investor as the firm and manager's responsibility. Therefore, management carries earnings management with the aim of the investor still assessing that the company has performed well according to their expectation. The next is the pattern of the earnings management. According to Scott 2015, there are 4 patterns of the earning management. The first is the taking a bet. Taking a bet is the pattern that shifting in expense in the period. It can be the future to the current period, or the current period is shift to the future period. This will be ordered to sacrifice the present for the realization of the future income goals. The next is the income minimization. This is similar to the taking a bet, but less extreme. Such a pattern may be chosen by the politically visible firms during the period of the high profitability, or when the firm seeks legislation to protect themselves from the foreign competition. The third is the income maximization. This pattern also related to the bonus purpose. So the income maximization is carried out when the company experience a decreased profit, and usually this pattern done to aim showing the good performance of managers so they can get high compensation. The next is the income smoothing. This earning management pattern is carried out by the making company's profit look even from the period to period so as to reduce the level of fluctuations. The next is the earning management technique. The technique of the earning management can be done with 3 techniques. Namely, the first is the take advantage of the opportunity to make accounting estimates. Management can affect the earnings management by making decision on the accounting estimate that they could indirectly affect to the earnings, such as estimated level of bad debts. The level of bad debt will be borne by the company. The manager can manipulate the estimate of uncollectible account so that if the bad debts are large, it will be reduced profit and vice versa. The second is the changing on the accounting method. Manager can use the variety of the accounting method so that it can be affect the earnings, such as the choice of the depreciation accounting method. Then, manager can also use the cost of the goods sold recognition method, namely the first in first out method and weighted average method. The third is the shifting the period of expense or income. This technique is similar to take a bet pattern by shifting the expenses or the income to the another period. To move to the empirical model of the earnings management, since flourishing in 1960s by the study of the efficiency market hypothesis by Ball and Brown 1988, accounting researchers began to evolve to find the best model for detecting earnings management. According to Sulistian 2008, there are three approach models to detect earnings management, namely, the first is aggregate accrual models. The aggregate accrual model uses the discretionary accrual as a proxy for detecting earning management, as well as the accrual component as the component that appears that is not accompanied by the cash receipt and outflows. This model was developed by the Healy 1988, D'Angelo 1986, Jones 1991, and Deco at 2010. The second is the specific model accrual, an approach that calculates the accrual as the proxy of the earnings management by using certain financial statement item from the certain industry. For example, the allowance for the receivable from the insurance industry. This model was developed by McNichol and Wilson 1988, Petroni 1992, and McNichol 1998. The last is model distribution of the earning after management. This model is using the earned realization frequency to detect the changes of the frequency is higher than expected. This model was developed by Burt Tackler and DeKeff 1997 and De George et al. 1999. The next is the tax planning. Tax planning is one of the many tax management functions is used to estimate the amount of the tax to be paid and things that can be done to avoid taxes. That the tax planning is an effort carried out by company's management as the taxpayer to minimize the tax debt and that must be paid without violating the taxation laws and regulations. According to Early Swandy 2011, the types of the tax planning can be divided into two, namely the national tax planning and international tax planning. The two types of tax planning that are inherent difference between the national tax planning and the international tax planning, which lies to in the tax code that will be used. There are several strategies in the tax planning. The first is the tax saving, namely the taxpayer effort to avoid the tax debt by refraining from the buying products that have the value added tax. And the second is the tax avoidance, namely the effort of taxpayer not to commit the act that they are subject to the tax or the effort that are still within the framework of the tax law and the regulation to reduce the amount of tax owed. The next is the delaying payment of tax obligation, namely by postponing payment of the tax obligations without the violating applicable regulation can be done through the postponing VAT. According to Swandy 2011, there are several factors that affect the tax planning. The first is the tax policy, is an alternative to the various objectives to be addressed in the tax system. The second is the tax law. The next is the tax administration. The next is loopholes. Manager can use to pay taxes less than or even not paying at all for the income certain loophole. The next is differences in the tax rate. Where a greater tax rate, the greater motivation to the taxpayer to carry out the tax planning. The next is the step of the tax planning. According to Cahyono 2005, stated there are several steps for the tax planning. The first is maximizing included income. Effort to maximize the excluded income or effort to maximize the income that is not as a tax object. The next is maximizing the fiscal cost. Is the action tax from the form of the action taken by the increasing fiscal deductible cost. And the last is the minimizing the tax rate. Is an action can be done by imposing the tax as the minimum possible rate. The next is the deferred tax expense. In principle, deferred tax expense is the impact of the future income due to the temporary difference between the accounting and taxation treatment, as well as the tax loss carry forward, which needs to be represented in the financial statement of the certain period. Sumomba 2010 state that deferred tax expense arise due to the temporary difference between the accounting profit and the taxable profit. The next is the previous study. In the previous study, generally found that the tax planning has a significant influence to the earnings management, while the Aditama 2014 and Setiawan 2016 found that the tax planning has no significant influence toward the earnings management. But the other researchers, such as Fitriani 2016 and Astutik 2016, Andika 2017 and Rahman 2020 found that the tax planning has significant toward the earnings management. The significant influence of the tax planning toward the earnings management is related with the agency theory. In this condition, the government as the principal party and the management as an agent, each of them have the overlapping methods. Propose the hypothesis H1, the tax planning has significant influence toward the earning management on the state-owned enterprises that listed in Indonesian Stock Exchange. H2, the deferred tax expense has the significant influence toward the earnings management on the state-owned enterprises that listed in Indonesian Stock Exchange. H3, the tax planning and deferred tax expense simultaneously have significant influence toward the earnings management on the state-owned enterprises that listed in Indonesian Stock Exchange. Okay, we move to the chapter 3, research methodology. The first is the research design. The research design of this study is the quantitative method because the data presented in this study is the form of number. And the type of this research is the empirical study. And the next is population and sample. The population is the companies as listed in Indonesian Stock Exchange. And the sample is the state-owned enterprises that listed in Indonesian Stock Exchange. And the source of data of this research is the EDX website and the company's official website. And the data collection technique is just the secondary data by analyzing the data from the financial statement that are downloaded from the EDX website and the company's official website. The next is the research variable. This study using the tax retention rate to measure the tax planning variable. According to the Wet et al., the formula of the tax retention rate is the net income divided with the pre-tax income. For the deferred tax expense variable, the study using the formula by Philip et al. 2003, the formula deferred tax expense period T divided with the total asset period T minus 1. The next is dependent variable. This study used the modified Jones that founded by Deco et al. 1995, with the step out. The first is calculate the total accrual, namely net income in the year T less operating cash flow in the year T, using the following formula. Furthermore, the total accrual are estimated using the ordinary least square. The second, with the regression coefficient as the formula before, then the non-discretionary accrual are determined by this formula. After that, the discretionary accrual as the measure of the earning management are determined by the formula. Discretionary accrual companies E in the period of T equal to the total accrual minus with the net non-discretionary accrual. The next is data analysis and hypothesis testing. The study using the statistical descriptive test to analyze the data, which consists of the classical assumption and hypothesis testing. In classical assumption, there are normality test, multicollinearity test, heteroscedasticity test, and autocorrelation test. In hypothesis testing, there are multiple regression, F-test, T-test, and coefficient determination. Okay, we move to the chapter 4, result and discussion. The first is sample of the research. The research object is the state-owned enterprises that listed in Indonesian Stock Exchange period 2017 until 2019. This sampling method is the purposive sampling that use the criteria in choosing sample. So the total is the sample is the 15 firms. And the total data is the 45. The next is statistical descriptive test. The result of the statistical descriptive test, we can see that in the table 4.3. Based on the table, we can conclude that the data in this study is varied greatly, and there were some extreme data that could be not included. The column N, the valid data is only 40 because the 5 of the data is cannot include. The next is the classical assumption test. The first is the normality test. The normality test we can see in the table 4.4. This study using the one sample Kolmogorov-Smirnov test, Gorov-Smirnov normality test aims to test whether the residual is normally distributed or not. A good regression model is when the research meets the significant requirement that are above the 0.05. From the table, the result of the normality test had the residual value 0.2. So it can be concluded that the regression in the study is good regression model. The next is multicollinearity test. The result of the multicollinearity test, we can see that at the table 4.5. The multicollinearity test aims to test the presence of the absent intercorrelation issues between the independent variable. The value the multicollinearity test is based on the tolerance and FEF, variance inflation factors. A good research is that has the tolerance is greater than 0.1 and the FEF smaller than 10. In this study, the tolerance value is 0.890 and the FEF is the 1.120. Based on that, we can conclude that the study do not occur the multicollinearity issues. The next is the heteroscedasticity test. Heteroscedasticity test is the classical assumption regression model. A good regression model is that regression doesn't occur the issues of the heteroscedasticity. The indication is the data doesn't spread and not form a pattern and spread above and below 0. From the figure 4.1, we can see that the data is the for the figure 4.1, we can see that the points do not form a pattern and do not hold and spread above and below 0. So it can be conclude that the study do not occur the heteroscedasticity issue. The next is the autocorrelation test. The study using the run test to indicate the autocorrelation issue in this study. A good regression model is the regression with the significance greater than 0.05. From the table, we can see that the significance of the run test is the 0.423, which is greater than 0.05. it can conclude that the reset regression doesn't occur the autocorrelation issues. The next is the hypothesis testing. The first is the coefficient determination test. The coefficient determination test is aimed to test how far the independent variable's ability to explain the independent variable. This table shows that the R square is the value 0.19. This shows that the ability of the independent variables, namely text planning and deferred text explain in explaining the dependent variables, is the 19%. The second is the F-test. This research used the F-test to analyze the effect of the independent variables simultaneously to dependent variables. In F-test, analyze the effect in the simultaneous by consider the significant value and compare the F statistic to the F distribution table. From the table, it can be seen the significant is the 0.2, that less than 0.5. Also, the F statistic is the 4.335. See the F distribution table. The value F table is the 3.245. Based on the value of the statistic is the greater than value of F table. It can be concluded that the independent variable, text planning and deferred text explain have simultaneous influence toward the earning management. The next is the result of t-test. T-test used to analyze the effect of the independent variable toward the dependent variable partially. This test is using the value of theta statistic and significant value. From the table, it can see that the significant value of text planning is 0.014, that less than 0.05. The value of theta statistic is minus 2.574, it less than the t table that has value 0.68118. It means there is a significant influence of the text planning toward the earning management partially. In the deferred text expand variable, the significant value is the 0.613, that's greater than 0.05, and the theta statistic is the 0.510, is less than 0.68118. It means there is no significant influence of the deferred tax expense toward the earning management partially. The next is discussion. The results have shown the independent variable consisting tax planning and deferred tax expense simultaneously has influence toward the earning management in the state-owned enterprises that listed in Indonesian Stock Exchange in period 2017 until 2019. This result reinforced by the acquisition of correlation of the 19%, indicating the models used in the study and the earning management has a relationship. So, the hypothesis 3, the tax planning and deferred tax expense simultaneously has significant influence toward the earning management on the state-owned enterprises that listed in Indonesian Stock Exchange in the period of 2017 until 2019 is accepted. This argument support the result of the coefficient determination test even it has small percentage. The partial hypothesis testing result show the hypothesis 1 tax planning has significant influence toward the earning management on the state-owned enterprises that listed in the Indonesian Stock Exchange period 2017 until 2019 is accepted. This finding support that the one of the objective of earning management is tax purpose. This result support the previous study that conducted by Fitriani 2016, Astutik et al. 2016, Handika 2017, and Rahman 2020. Variable deferred tax expense has no significant influence toward earning management. So the hypothesis 2, deferred tax expense has a significant influence toward the earning management on the state-owned enterprises that listed in Indonesian Stock Exchange in the period of 2017 until 2019 is rejected. This result doesn't support the political cost hypothesis that said that deferred tax expense can affect the earning management, as the motivation for tax saving can be done by delaying income tax and accelerating costs to save taxes, one of which by manipulating deferred tax expense related the accrual so that it allows the management to perform earning management. This finding support the Setiawan 2016 that found that deferred tax expense has no significant influence toward the earning management. The last chapter is the conclusion and suggestion. The first is conclusion. There are three conclusions of this study. The first is that tax planning has significant influence toward the earning management on the state-owned enterprises that listed in Indonesian Stock Exchange period 2017-2019. The second, deferred tax expense has no significant influence toward the earning management on the state-owned enterprises that listed in Indonesian Stock Exchange period 2017-2019. And the third is the tax planning and deferred tax expense simultaneously has significant influence toward the earning management on the state-owned enterprises that listed in Indonesian Stock Exchange period 2017-2019. The next is the implication of the research. This research could provide new evidence and give new insight related to the literature on the influences of the tax planning and deferred tax expense toward the earning management. This study gives information to the government, shareholder, and other users of the financial statement. Even though the state-owned enterprises, which a major shareholder, still practice an earning management. Based on the finding that found that the tax planning has significant influence toward the earning management and deferred tax expense has no significant influence toward the earning management, partially. It was suggested that the government and shareholder and other user of the financial statement more be careful to understanding in the company's financial statement so that it will be the risk of loss. The last is the limitation and suggestion. The study has several limitations that can be improved by the next researchers. The study finding found the influence of dependent variable to dependent variable only 19%. That means the independent variable in this research have small influences to dependent variable. There are still many variables that influence the earning management practice which did not research in the study. The study used the modified Jones that founded by Deco et al. The 1995 as the measurement, while there are many other the earning management measurement such as Haley 1985, the Angelo 1988, Model Jones 1991, and the last is the limitation and suggestion. The study has limitation. The study finding found that influence of independent variable to dependent variable has small relationship. The data is extreme because there are several factors of business. The study used the modified Jones 1995 that founded by Deco et al. 1995 as the earning management measurement, while there are many of the others earning management measurements such as Haley 1985, the Angelo 1988, Model Jones 1991, and Revenue Discretionary 2010. Based on the limitation, the several suggestions for the future research, namely the future needs to add the other variable that may contribute to the earning management practice that do not research in the study, such as the free cash flow, current tax, managerial ownership, and leverage. The future study chose the sample from the one sector, and the sample is the longer period observation. And the next researcher can use the revenue discretionary model 2010 as the newest model, which founded by Deco et al. 2010. So it can provide a more reliable information to obtain accurate estimate. That's all my presentation. Thank you for the attention. Assalamualaikum warahmatullahi wabarakatuh.